We've got an update on Bittensor, ticker TAO, and we've got a current rejection level where we keep getting rejected, we keep getting rejected, and we keep getting rejected. And guess what? Yesterday, rejection again. So what happens if we overcome this key level? Because it is a bullish sign, guys. We've pulled back since yesterday around 18% to the downside. So we've pulled back 18% to the downside, but we've got this bad boy to fall back on, which is the 200 daily moving average. That's going to be the wiggle room, and that's going to be the risk to reward that we need to understand that if we drop that level, then we turn bearish. Above the 200, we remain bullish. So what is the key level we need to overcome in the short term? What is this high probability move? Why am I getting excited about TAO? And firstly, let's get the introductions out the way. I'm Keith. This is the Crypto Bullseye channel. On this channel, you'll learn crypto, you'll learn macro, and we look at the bigger picture to pay collectively to understand exactly where we are in the cycle and how to take advantage of the cycle. And I've gone through all of these charts this morning, and TAO is the one that stands out most because anyone that knows me, it's all about risk to reward. You reduce your risk and you look after your risk, and the reward will look after itself. You can see above the 200 moving average, guys, I say it time and time again, we're bullish. Below the 200, we're bearish. Above the 200, it's support. Below the 200, it's resistance. So you can see support, support, support. You can see it acts as support time and time again until you go below that, and that acts as resistance. So firstly, risk to reward. You bring up your risk to reward tool, you're at the 200 moving average, you know exactly where you're wrong. If hypothetically you're shooting for the previous swing high, that is a 5.15 risk to reward, guys. That's a good risk to reward. But more importantly, what if you're wrong? If you're wrong, you're losing from the 200, you're losing 4.5%. Where's the next support base? Down here. So if you're wrong and you drop 36% to the downside, that 4.5% is insignificant. So you want to be wrong with the least amount of capital at risk. But what does it do, guys? If you are wrong and it comes back down here and you're out here, that creates opportunities at next support. So what would this do to your risk to reward, knowing that that's your next support? There's your previous swing high. That'd be your protection zone. What does this do to your risk to reward, guys? Brings down your risk, increases your reward, 6.23. That is a big swing, guys. That is a big swing. That's how you can take advantage of it. Don't worry if you lose 2, 3, 4%. Make sure that you can capitalize on 30, 40% once you drop to the next support if it is a big swing to the downside. So that's not why I'm interested. We're going to talk about a high probability move next. But firstly, I want to show you one thing. If we zoom out, we're going to add in a fixed range volume profile. We're going to take this all the way from the swing high, all the way down, including the bear market low to where price action is now. And you can see that this is a key area. I'm going to add this area in. This is a significant area because what happens, it acts as support, 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 support. What happens when you fall through? Resistance, 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 resistance. This is consistent line. That is support when you're above. It is resistance when you're below. So that's what we're looking for in the short term, is to overcome that level. That level set at $457.10. Now, what is this high probability move we're talking about? It's the inverse head and shoulders. Let's talk about it from a psychological perspective, and let's add it in on the chart. So you've got, firstly, you've got your left shoulder. What's happening here? The bears have put in a lower low. We've come back in. You can see we've got a lower high here. We've come back up. We've tested this lower high. What does that show? That shows strength for the bulls. The bears have got their next turn to try and push price down and put in another lower low. They've done that. So they've put in a lower low, and the bulls have managed to push, 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 push all the way back up to the neckline. So they've pushed all the way to the neckline for the third time. There's first, there's the second, there's the third time. Now, this is a significant thing. We're pulling back again, we're pulling back again. To the 200 moving average, we need to hold this 200 moving average, but you've put in a right shoulder here. And if this right shoulder holds, and you come back up to test the neckline for the fourth time, you can measure that one way from the tip of the head. Remember, we show it time and time again on the channel. It's crazy the amount of times this plays out. You can project the breakout from the tip of the head to the neckline, and the breakout would take you all the way to $835. So you can see that that is the resistance barrier. That's the area we need to overcome. But one thing you can see here as well, there's the biggest area of volume. We're at the biggest area of volume. As we overcome that, volume gets less and less and less. That means resistance levels are easier to break through. That's why I'm interested in it, guys. From a trading perspective, you can see, from an indicator perspective, you can see one thing: oversold, oversold, oversold. So we're oversold, we're putting in a higher low, we're coming back down, we're testing the 200 daily moving average. That allows for a good risk to reward. If you are wrong, you're wrong with the least amount of capital at risk. Then once you break that neckline, guys, that is going to be a real surge in TAO. So let me know in the comments what you want me to cover next, and I'll see you guys in the next one.